Okay, we are now live. All right, so thank you for joining us. We have Cyndi Nunez with Guild Mortgage that is here, and we're just going to be doing a simple little chat about some questions that I get asked all the time as a realtor. We always get asked about closing costs, and when the lenders come in about points, what does that mean? Buying down points, all these types of things, which she is definitely the expert on it. So I'm going to pass it over. Thank you for joining us, Cyndi. And if you could kind of give a little rundown how long you've been in the industry and tell us a little bit about yourself.
Great, Steph. Well, thank you for having me. I have been in the mortgage industry since my high school junior year, so just over 35 years. I love what I do. I have been in my community the whole time, and I have a great team behind me. And it's a big part of my give back, and my why is to be in this industry and give back to home buyers every day.
And you get back to home buyers, but you also go back to realtors, because when I started out, you were very, very, very helpful. It's very overwhelming learning everything, and you kind of took me under your wing and you helped me out and you educated me. But I've also worked with buyers that say, you're awesome. You've helped them through the whole process. And that's kind of why we're doing this today, because there's a lot of questions that I get asked all the time, and people almost feel intimidated when they're in the mix of getting a loan to ask these questions to the lender.
Right. So, yeah. That happens a lot. So it takes a lot of hand holding, because we are in our industry, we're used to talking the lingo, and buyers don't always know that. And you kind of assume, so you have to always take a step back and just say, hey, I'm learning this for the first time. I'm teaching it for the first time, and really go deep so they have a complete understanding. That's one of the things that I really take pride in, is hand holding throughout that entire process.
Yeah. And not being afraid. Tell them, don't be afraid to ask. Don't be afraid. There's people that have gotten loans, 5, 6, 7 loans, and they're still like, I have no idea what points means. Like, can you explain that? I don't want to ask now because I should know this. No.
Right. Yeah. And it's evolved back in front of the, up to the surface. So people were not paying points for many years, going through the crash and coming back. Most people, rates were so low that they didn't choose to pay points to buy the rate below what the market rate was. But now, as online lenders became so aggressively marketing people and sending, flyers with a 2.25% interest rate with points in the fine print, us brick and mortar lenders had to come to the forefront and start to explain more about points and when it could be worth it and when it's not. So again, that really wasn't prevalent in years prior, but today it's definitely in every conversation.
Okay. Well, I kind of skipped forward a little bit. Let's kind of take a step back. Let's talk about like closing costs, defining closing costs, and what's involved in closing costs, and how closing costs, we see that in escrow a lot. That's another thing that we'll do another interview on. Right. A lender and escrow, people are very confused on that sometimes. But let's just start with closing costs. What does it mean? What does it cost to the consumer?
So there's 3 segments of closing costs. There's your non-recurring, which is your standard lender fees and third-party fees, your appraisal, credit report, flood certification, and then your escrow, title, notary. All of those things are your standard closing costs. And there's another segment, which is discount points, which is outside of that if you choose to buy your interest straight down. And then there's your non-recurring costs, which are your prorations for taxes, insurance, and your prepaid interest. And those are going to happen one time. Just like the other with closing costs, that's one time. But they call it recurring closing costs because you're going to have a tax and insurance either impound account with your loan or aside from it. And then your prepaid interest is paid in advance, because when you pay a mortgage, you pay for the month past instead of the month ahead of you, like rent. So basically you have interest for the month that you're closing in until the end of that month, and that's your prepaids. Discount points are separate. Do you want me to talk about that now? Or
let me go back to that, because I always get people asked that, why do I have to pay so much of the interest up front? Why? That is almost every single time people ask me that. Explain that.
So if you close on the 5th of the month, you're going to owe 25 days of prepaid interest. So basically, that's your loan amount times your interest rate divided by 365 days in the year. And that gives you what's called your per diem. And that's your daily interest. Okay. So if you close on the 5th of the month, let's say you're going to close October 5th, you're not going to have a first payment until December 1st. So in December, you're going to make a payment for November's interest. And remember, we closed October 5th. So you're going to owe the lender at closing interest from the 5th through the 31st. You skip November, you start December, and that covers the month past.
Yeah. I'm sure you get that too from people.
Oh yeah, all the time. Because it's not something that makes sense. It's like we've never heard of it. It's foreign. It's not on any other type of loan. So yeah, we explain it quite a bit.
Yeah. And they get people, whether they're buying a house or they're doing a refinance, same applies on both, correct?
Same applies on both. And then when you're doing a refinance, you're going to have interest accrued on your loan that you're paying off. Even if you made your October payment, October covered September's interest. So you're still going to go October's interest and then interest from the close of escrow to the end of that month. So it could be double sometimes.
Okay. I'm sure that makes people happy, right?
Yeah. The other thing I wanted to clarify that I get a lot is people will tell me, even on a purchase, I want to roll my closing costs into the loan. And that's not an option. So on a refinance, you can add your closing costs into the loan if you have equity. But on a purchase, you cannot finance closing costs. They must be paid in cash.
Okay. And then going back to that, if they have equity in the house and they're refinancing, do they have to have a certain amount of equity to be allowed to be able to do that?
The minimum is 5% for a conventional and 2 3/4% for an FHA. And they don't have to have equity on a VA to do a refinance.
Okay. All right. So now let's dive into points, because you hear, like in our lingo, in our language, I'm going to buy down the points. What are the points today? How does it relate? And especially like first-time home buyers, they have no idea what points even mean. So let's take it back from the beginning. Like, what do points mean, and what is buy down the points, and how do you know if it's good for you when you do that or not?
Right. So a discount point is a charge that a lender provides or produces based on the bond market every day. So we don't just get one interest rate when we get a rate sheet every day. We get a menu of rates. Let's say today that ranges from 2 1/4 to 3.5%. And there's going to be a sweet spot every day, which doesn't cost you any points for that rate. So let's say today that rate might be 2.875, but the customer's like, well, can I get anything lower? Excuse me. So yes, we can go lower. It just depends on what the cost is. So discount points go in increments of 1/8%. And the cost between 8% in note rates, for example, 2.875 to 2.75, could cost you anywhere from 1/8 to 0.5%. So if it costs you only 1/8 on a given day, it might be worth it for that. If it costs more than that, it might not be. And the way to recoup sorry, Steph.
Okay, we're all human.
Talking too much. The way to know if it's going to make sense for you is usually the period to recoup is 3 to 5 years. If you can recoup your money with the payment savings in less than 3 to 5 years, then it's worth it for you.
Okay. So, and if people don't really know how to figure that, they're going to be, once again, we don't want them to feel not confident in asking. Just ask. Explain where we're at today. Is it worth it for me today? And you'll
we're going to give that as the why too. Definitely.
Okay.
We're going to explain that in full detail.
Okay. And as far as time to recoup and the cost, when you look at the cost of redoing like a refinance and the total cost of it, then you guys work it out for them to show them, okay, this is going to take you 3 years or 3.5 or 4 years to recoup the cost.
Right.
And we'll go through those scenarios with them if it's possibly worth it for them to buy down the rate at that time. Give them the options for that.
Definitely. Yeah.
Okay. Now, how, so some people ask me this, not everybody, because some people don't really care how we're all paid, right? They just want to get in their house. They just want to
get
paid. They don't care how I'm paid. They just want to get us to get our job done so they can get in the house. But I get this asked as well. What's the difference between a lender and a broker, and how are they paid, and who pays them? And there's confusion on that side as well.
There is. Yeah, definitely. So if you're a direct lender, like for example, Guild or Caliber or Loan Depot, we are employed originators and we are paid based on the production that we do, but we're paid from our employers based on the amount of loans we do per month. With a broker, you're paid loan by loan basis, and the buyer will see the charges that they're paying to the broker on their closing statement or their loan estimate. So you always want to pay close attention to that. Both can be beneficial. There's not a lot of difference, but one is disclosed to the customer, and the other, as with us, there's no fee charged to the borrower. Does that make sense?
Yeah. So if they're working with, because there's lots of lenders out there, there's lots of local lenders, and if they're working with the lender and they don't know, are you a direct lender? I mean, all they have to do is ask, are you a direct lender? What's my charge to be working with you? And it'll be disclosed at some point in time or right up front.
Right. Yeah. So if you're working with a lender, direct lender, you're not going to have a charge for working with us, basically. If you're working with a broker, they have to disclose what they're going to make because they are paid loan level or transaction level, to where we're paid aggregate kind of on all the overall volume we do per month.
Okay. Perfect.
That might be a little foreign, but that's the bottom line.
No, and that's one of the reasons we're doing this is because, we're Facebook Live right now, but this will be recorded and I'll upload it and you could share it. And those people that have a lot of these questions, this is a video you could easily share with them as well. And kind of, just it makes it easier where people could go back and watch it when it's good for them, when they have time to process it. So,
right. I just have a question for you, if you don't mind. Okay. So when you're going through a contract with a borrower, because this is what we get asked a lot, is when the buyer and seller are going to split escrow 50-50, they think that's their closing costs. So when you're explaining to them that portion of the contract, how do you explain that?
Well, it depends on who I'm talking to, if it's or if it's somebody that has been through this a few times. If they've been through it a few times, they understand the difference between escrow costs and closing costs. And if, like, I have a certain app that I use, and it's from one of the escrow companies, and then I show them what is closing costs, what's escrow costs, because just talking to people, it's kind of confusing. It's hard for them to wrap their head around, especially first-time home buyer. They got listing agent, they got buyer's agent, they got lenders, they got brokers, they got escrow, they got title, they got, all this, their heads swarming. So I actually show them, I have my iPad with them and I show them the difference, like what the escrow costs are and what the closing costs. And I would say 9 out of 10 times, especially with first-time home buyers, until we sit down and visually look at it and go over it, they had no idea there was a difference between the two. So, and I would say that's majority of times, 9 times out of 10, they're like, wow, we had no idea.
Right.
So I always tell them, hey, this is a process and I want you, especially the first-time home buyers, they might be clients for life. They might buy 5 homes from me throughout their life. And it's like the more they could get educated right up front in their very first home, and the more they feel comfortable asking me, then that's just going to be beneficial for both of us, for the lifetime of them in this industry. So I get a lot of questions. They'll be texting me, email me, whatever throughout the night, because I want them to ask. And once they see that, they're like, oh, that's kind of cool. A lot of people are visual,
right.
Talking, but it doesn't really mean anything until they actually see it. So I use that app quite a bit, and it helps to show them like what the difference is. Yeah.
Got it. And that really helps. I mean, that's why you're so professional and why you do such a good job. So that's appreciated on my end. I can tell you that for sure.
Well, thank you. And anybody that's seeing this, so we're going to try to keep it short, little 10 to 12 minute videos. If anybody has any other questions that they'd like us to cover in the next round of interviews, we're going to do a series of these. Feel free to reach out to Cyndi or myself, and then we'll cover the next segment, next topic. And we're always open to questions and your input. Okay. Anything else, Cyndi?
No, thank you for having me. And I apologize for the cough. I'll make sure we have a cough drop next time.
All right, great. Until next time, we'll do it in a couple of weeks. Thank you so much for joining us. And we'll say adios.
Sounds good. Thanks, Steph.
Okay, bye-bye.